Back this up to? Is this Evergrande in China? What are we going to describe this as?
It's a combination, Andrew. I mean, people are going to look for past analogies. Is this the Asian crisis? Is this the beginning of a long-term capital issue? I think, the hardest thing here is transparency, and we don't know how China's going to handle this. My feeling is that China is going to use every piece they can in terms of fiscal or monetary to make sure that this is taken care of. But there will be unintended consequences. I mean, capital markets, as you can see this morning, we could see some effects of even in the bond market. And I think that's the one thing, and you guys were talking about it a couple of minutes ago, we don't know what this thread's going to be that's going to pull some of this air out. I don't expect it to be huge, but, we're down, 3-4% from the peak. It can easily go down another 5 to 10%. It's just natural and normal to get pullbacks. So I would look at this, but a combination of this with earnings coming up and taper, there's a lot of uncertainty. So if I had cash, which I do on some clients, I'm slowly dribbling it in. And if the opportunity comes for a bigger sell-off, hey, I'm still positive for the outlook for the next 24 to 36 months. So I think,
but just to put a fine point on it, you're not suggesting this is going to be some kind of grand crisis or that there is going to be meaningful contagion. We were talking about whether there's a China problem or this is a global problem.
I don't feel so. I think, look at where all the governments are right now. I mean, we're talking taper. What does that mean? That means we don't taper. That means, rates stay even lower for a longer time. So I think given the COVID situation and all the other things, there's enough of support here. Does that push the markets higher? Probably not. It probably gets a multiple compression in the short term for it. But how long that is a question of a trade, not an invest. Okay,
so to me, the interesting note in what you just said in the prior answer was, if I have some clients who have some cash on the sideline, I'm going to be putting some of it to work, and maybe I'll put even more of it to work if there's a steeper plunge. When 9 o'clock rolls around this morning,
absolutely.
What would you be doing? And if you're predicting at all that we're actually going to have an even greater sell-off, why put any money to work this morning if it's going to be worse later?
So I don't know if we're going to have a greater sell-off, and that's what I'm saying. Timing it is almost impossible because you could easily have China kind of repair this in a day, and then all of a sudden things could be fine. So I'm going to look now when the markets pull off to the high-quality companies, that some that might sell off for whatever reason. So whether it's consumer staples, companies like Constellation Brands or Coca-Cola, or in industrials, if high-quality companies like Honeywell sell off. So that's where I'm going to kind of look at now and say, okay, are there going to be some opportunities? If not, I'm just going to keep to my process and invest. But, and if the market pulls back even more, then I think you get an opportunity to buy a lot more across the board.
And what's your sense of what we're going to hear this earnings season? I mean, Becky was absolutely right. We've had a phenomenal earnings season. I mean, up until now, everything's looked great. It also makes comps very difficult.
It does, Andrew. And just last week, if you looked at a couple of companies, Thermo Fisher announced great projected earnings coming forward. They have great revenue growth. But on the other hand, IFF said, hey, we've got huge input costs. We're not going to make our margins. The stock sold off. So I think you're going to focus on input prices and revenue growth. Who's going to be able to increase their earnings in spite of higher input costs? And also, who's going to have higher demand going forward for the next 12 to 24 months? Really, because multiples today are peak multiples, and we really have to kind of sustain those. You need companies and sectors to grow, and that's where I think people are going to get penalized or get rewarded. The other part is there are some cheap sectors, stocks out there too. I mean, you look at General Motors at 8 times earnings, or you look at a CVS at 10 times earnings. I think there's more margin of safety there, because if they can say, hey, our revenue is growing, but right now we've got a short-term issue, they're not going to fall as much as some of the stocks that are trading at either 30, 40 times earnings, or the ones that are trading at 20 times sales. So I think this is going to be an interesting part to see where companies are going to say where we're going to be given higher input prices, given what's going on in the global uncertainty. And also, the other thing to watch for is capital markets. I mean, we at any point could get a capital markets freeze, and those companies that are highly indebted might not be able to go back and refinance, even though rates are so low. It just could happen in that way.